So for lesson 2.2, we're going to analyze how transactions affect accounts. And so we're still going to use our T's, but we're going to use actual dollar amounts this time and not just the pluses and the minuses. Okay, so to know what account titles we need to use at the top of all of our T's, we always refer to a company's chart of accounts. We can't just make up a name. We can't say, oh, this is going to be utilities expense, or this is going to be a phone bill, a phone expense. This is a list of accounts that has been pre-designated by people that have sat down to plan for the business. And so here for Delgado Web Services, we have a chart of accounts, so you can see that these are all the accounts that we'll use for our transactions throughout the chapters. And notice that they have numbers, and so we'll talk about the numbers a little bit later in another chapter, but I just want you to focus that these are pre-designated, they have their actual account titles, it's not something we're just randomly making up. Okay? So what we're going to do to work through this lesson is we're actually going to use the transaction for Delgado Web Services and do the T's for each of these transactions, okay? So I'm working through the actual pages in the book, and I'm going to be looking at the blue boxes. The picture in the book will be matching what this transaction is giving us, and so the pictures in this book are awesome. You can get a lot just by looking at the pictures and the transactions that go along with it, okay? So we're basically doing the same thing on our own page of T charts, okay? So our first transaction is for January 2nd. We received cash from the owner as an investment of $2,000, okay? So we're going to have two accounts. Again, going through the acid test, what two accounts are affected, okay? So we're going to have, you've got a blank sheet of T's, okay? And we're going to do a set of two T's for every transaction. And then at the end, we'll kind of talk about how that isn't really how it works, but initially that's what we're going to do. So these first two T's right here, this is going to be for our January 2nd transaction. Received cash from the owner as an investment. So again, received cash as, all right, so which accounts are affected? That's our acid. So cash and capital. Michael Delgado, capital. So put those two account titles in. Okay. How is each of these classified? Well, we know that's an asset. We know that's owner's equity. Okay. And then how is it changing? We are increasing cash and we are increasing capital. Okay. And then how is it entered as a debit or a credit? So for increasing cash, our normal balance side is a debit. Okay, and if we're increasing capital, our normal balance side, our increasing side, is a credit. So it's the $2,000. We're going to put here, and we're going to put here. Okay, one debit, one credit. For every transaction, our debits must equal our credits. So that's a visual check for you. There's one number on the left, and there's one number on the right, because debits are always on the left and credits are always on the right. Okay? All right, going back to our book, our next transaction, still on January 2nd, paid cash for supplies for $165. Okay, so what two accounts are being affected? This is January 2nd, another one. Cash and supplies. Okay, So now we paid cash, so cash is decreasing. What side does it decrease on? Decreases on the credit side. Supplies are increasing. What side does it increase on? It increases on the debit side. So my 165 will be decreasing cash here, and 165 increasing supplies here. Okay? And we can put this little note right here. We're increasing, increasing, decreasing, increasing. Two supplies, we have a plus and a minus, right? Other side, plus and plus. Okay, next transaction, January 3rd, paid cash for insurance, $900. So what two accounts on January 3rd? Paid cash for insurance, so cash and prepaid insurance. Okay, knowing that that's the name of the account coming off of our chart of accounts, prepaid insurance. Okay, paid cash, it's going to decrease. Therefore, it's on the credit side. Notice I'm not using pluses and minuses. I'm not doing plus 2,000 or minus 165. The plus and the minus come from which side of the T that number is on. Prepaid insurance is increasing. It's an asset. So assets increase on the debit side. All right, January 5th. Bought supplies on account from Canyon Office Supplies. So think about what two accounts are being affected. Supplies, and we now owe Canyon Office Supplies. That's an accounts payable. I know there's a little glare there. So an AP for Canyon Office Supplies. Okay, so for January 5th, supplies and an AP for Canyon Office Supplies. Okay, and the dollar amount was $220. We're increasing. We bought supplies. Those supplies are going in our cabinet. And we're also increasing how much we owe, $220, how much we owe Canyon Office Supply. And accounts payable increases on the credit side. So this is increasing and this is increasing. Okay, one debit, one credit. All right, and then the next one is on January 9th. Paid cash on account to Canyon Office Supply. So we're paying them $100. Okay, so we'll go up here. January 9th. To what two accounts? We're going to use cash and accounts payable for Canyon Office Supplies. We're paying $100, so cash is going to decrease on the credit side, and our accounts payable is going to decrease on the debit side, because the normal balance of accounts payable is a credit, but we're decreasing it because we don't owe them as much anymore. So we're going to put it in as a debit. Same thing here. Our normal balance for cash is a debit, but we're decreasing our cash, so we're going to put that number in as a credit, so it'll decrease. Okay? All right, so what I want to do is kind of show you how this works when we use the same account. So we're just going to kind of quarantine or quarter off this little section over here. Okay, and we're just going to talk about the cash account because we use cash, 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 right? We used it multiple times. All right, so here we started off with a $2,000 cash debit. Okay, then in our next transaction, we had a $165 credit. And then we had a $900 credit. And then lastly, we had a $100 credit. Okay, so these came from 4 different transactions, 4 different dates. Okay, so if you remember the definition of the account balance, it's taking all of the debits and all of the credits and finding the difference between the two. Okay, so basically this last transaction was January 9th. So on January 10th, how much cash do I have? Okay, so that's the question. On January 10th, how much cash do we have? Okay, so basically it's 2,000 minus 165 minus 900 minus 1,000. Okay, if you do that math, it's 835. Okay, and that is your account balance for cash. Okay, so that's kind of how the T's work. We don't, again, you don't see any pluses or minuses, but you know that this is a plus because it's on the left. You know these are minuses because they're on the right. And those are just following the rules of accounting. Okay? All right. So now we're going to do the working together 2-2. So find your working together 2-2. Page 42. Okay. It's going to, oh, that's got a big glare, give you all of the account titles. Okay. So, and you can see that we've got different dates here. So we're going to do each transaction separately, like we did here, not like we did here. Okay, eventually we're going to do it like this. Okay, but right now we're still doing each transaction by date. Okay, but this right here, at least we know what this is kind of like our chart of accounts for these transactions. Okay, so we know which ones to use. We're looking for March. Okay, received cash from the owner as an investment, paid cash for supplies, bought supplies on account, paid cash for insurance, paid cash on account. Okay, we're going to prepare 2 T's for each transaction. We're going to write the account title for each of the accounts affected. We're going to write the debit and the credit amounts on each side of the T. All right, so March 1st, receive cash from the owner as an investment. Okay, so we know we're going to use cash. And then the owner, looking at our chart of accounts, is John Jensen because it says capital. We know he's the owner. So John Jensen, comma, capital. Okay. And it's received cash $4,000. So $4,000, we're increasing cash, and we're increasing capital by $4,000. Again, if you need your cheat sheets, right? You've got your cheat sheets to be able to tell where your pluses and minuses are. Keep this out on your desk if you need to. Okay. March 3rd, paid cash for supplies. So the 2 accounts will be supplies and cash. Okay, supplies, we bought supplies, so that's going to be increasing, and that was $95. And we bought supplies with cash, so our cash is decreasing with $95 on the credit side. Debit, credit. One debit, one credit, they equal. On March 4th, bought supplies on account from Supply Depot. Okay, so the two accounts, supplies. Now bought supplies on account, looking at our chart of accounts, here's an accounts payable for Supply Depot. I'll let you use the AP. Supply Depot. Okay, bought supplies. We're increasing our supplies by 120. Okay, we owe Supply Depot 120. Accounts payable increases on the credit. One debit, one credit. Okay. March 6th. Paid cash for insurance. So our two accounts. Cash and prepaid insurance. Okay. Paid cash. We usually like to have the debit first, but I didn't write it that way. $250. So cash is decreasing $250. We're increasing the value of our insurance by $250. Okay, so we're adding, increasing, decreasing, one debit, one credit. And the last one, paid cash on account to Supply Depot. So again, if you can, try to get the debit first, accounts payable. Eventually we'll have to do that. And cash. Okay, accounts payable, cash, we're paying cash, $80, so we're decreasing our cash, and we're also decreasing how much we owe Supply Depot. Right, this is normally a normal balance of a credit. If we're decreasing, it's a debit, one credit. Okay. Okay, so that's taking our pluses and minuses for each of our accounts and adding numbers in for some actual transactions. So now again, flip that over, go through the on your own on page 42. Use your notes, use your cheat sheets if you need those to be able to complete that activity.